Hey traders, welcome to Quantsapp. My name is Varun, and recently we learned about built-up sectors. Okay, so how you can actually identify the trend of each sector so that you can actually gauge what that sector is actually headed for. Okay, so if that sector is bullish, then you can maybe spot some stocks which are outperforming and you can participate in those stocks because generally sectors and the top gainers or the top losers have a very good correlation. Okay, so a lot of times you will see that if private banks is moving up really well or at a good pace, then HDFC Bank will be the one that has the most cap in that particular sector. So HDFC Bank might be performing really well. So that is how you can capture moves on a lot more stocks. But today, what we will be learning is today we'll be learning about the breakouts and breakdowns in certain sectors. Okay, so it can be known as market-wide resistance and support or sector-wide resistance and support. So that is something that we'll learn about. So I hope you guys enjoy this video. Just let me know how the recent videos have been. Your support so far has been tremendous. I have been loving it. And obviously the negative feedback also has helped me. So make sure that you let me know how I can improve so that I can bring more quality content towards you guys. All right. Okay, so let us start without wasting a lot of time. This will be a relatively short video. I don't think we'll extend this video by a lot more things. But still, I would like to make you guys conceptually strong. I would like to give you guys a general idea on what the built-up is and stuff like that. Okay, so let's recap the previous video and let's know about some sectors that you can identify with. Okay. All right. So let me just share my screen. I will just share my screen and I will explain the concept of built up and open interest real quick without going too in depth into it. I'll just explain the concept of it. Okay. So what exactly do you mean by open interest? So you should be familiar with this concept because almost everyone in the entire FNO basket uses this. So I'm sure that you know. Okay. So open interest, for people who do not know, it is number of open contracts, as in it shows you how many traders currently are engaged in a trade. So let's say if there is one OI or one open interest, it would mean that there is one buyer, okay, and one seller engaged in this particular trade. Okay, if there is 100 open interest, then there is 100 buyers and 100 sellers. Right? It's as simple as that. Now, let's see how you interpret this. Okay. Let's say if future price is at 20,000. Okay, 20,000 is the CMP. Okay, 20,000 is the CMP. Let's say OI has increased by 100. So that means 100 new contracts have been added to, let's say, Nifty. Just an example. Where do you think the Nifty's price will be? Okay, so I'll just give you a hint. There is 100 new buyers and 100 new sellers. Okay, where do you think the market should go from? Now, this is what I'm talking about, futures open interest, right? So not options open interest, this is futures open interest. So 100 long positions are there in futures and 100 short positions are there in futures. Where do you think the market will go? If you guessed sideways, you are somewhat correct, because if there is equal buying pressure and selling pressure, that means market will go sideways. Now, whenever we look at futures, open interest is always balanced, right? If there are 1,000 open interest or 1,000 engaged trades, that means there is 1,000 buyers and 1,000 sellers. So it will always be equal. So how do you know where the market is going? So this is where the very interesting concept of built up comes from. So for people who do not know, we wait for future price to move and then we gauge. So let's say future price moves up to 20,100. Now I know that majority of these contracts are initiated by buyers, or majority of these contracts, buyers are aggressive. So that is how I know that the price could further go up. All right. So there are multiple built-up types. So we'll explain. Let's say if price increases, okay, and along with that, if let's say open interest increases, this is nothing but fresh buying. Fresh buying, or in technical terms, we call it long built-up. Okay. So similarly, if price decreases, let's say if there is a decrease in price, but an increase in OI, what would this mean? This would be interpreted as fresh selling. Okay. So we call this short built up. Okay, so I'll just type it here. So it's nothing but short build. Okay. Let's say now the unwinding part of things. Let's say if price decreases and along with that, open interest also decreases. How would you interpret this? So this is something where I would say that since open interest is decreasing, so there are no new positions being added. Instead, there is some activity in the existing contracts. So maybe the existing contracts might be squared off or something like that. So in this case, again, we'll look at price. I know that price is decreasing. So the existing sellers, existing buyers have actually squared off. So existing buyers will sell their positions. So you can actually interpret this as buyer's exit. Okay, buyer's exit or technically long unwinding. So long positions being unwinded, so it's long unwinding. Okay, and if price increases and OI decreases. Okay, OI decreases. This would be known as seller's exit. Okay, I'll just add it, seller's exit, or you call it short covering. As simple as that. Okay, so long unwinding and short covering is something that you can clearly see around here. So I don't think till here there will be any doubts, but the concept of cycle is quite simple, that long and long unwinding is a bullish cycle and short covering is a bearish cycle. So whenever price moves up, price will move up in a zigzag pattern. Okay, it will never move up quite straight. So this is the indication that there is long built up and then there is long unwinding. Okay, LU, let's see if I can write LU. Okay, horrible, but it's fine. Okay, then again we'll have long built up, then again we'll have long unwinding. Okay, LU, again we'll have long built up and again we'll have long unwinding. So long unwinding is a bullish cycle. Similarly, when the price falls down, it falls down in a zigzag pattern. Okay, not in a straight pattern. So it is basically short and short covering. I'm sorry, my handwriting is not as good. I'm actually drawing on the trackpad, so it's fine. So again, short and then again short covering. So short covering means price is recovering due to profit booking of sellers or even the exits of sellers. So it is nothing but short covering. So that is the generalized idea, right? So long and long unwinding is a bullish cycle. Short and short covering is a bearish cycle. Why? Because we need people to profit book. We need new positions to add. Okay, so that is the general idea. Now let's share the screen of Quantsapp and I will explain the concept in a simpler pattern, or we'll try to see how we identified some sectors in the previous video. Okay, so according to the previous video, you can see that we opened built up sectors. So you can just search for sectors actually. If I add sectors, you can directly open sectors. So built up sectors is a tool which I always use. Okay, here I look at sector cycle. So under sector cycle, what I normally do, I'll just set the look back period as default. So 20 days look back period. I'll set the reading as long and long unwinding or short and short covering. And I'll set the count here as 14. So out of the past 20 trading sessions, I want at least 14 days to have a long and long unwinding cycle. Okay, so that trend is confirmed. So if I just click on apply, I know that these are the sectors that are experiencing a long and long unwinding cycle. So we have auto ancillary here, and then we have telecom as well. Right. So these are the two sectors which are performing well. Right. On the bearish side, if I click on short and short covering and apply, then I will see there might be a couple of sectors maybe. All right. So FMCG and realty sector are the sectors that are performing on the bearish side here. Okay. So this is again a very good example here. Two sectors on the long side, two sectors on the short side. Now, I normally like to see open interest data when it comes to breakouts and breakdowns. So I generally look at options open interest. So options open interest is generally easy to use because if I just open the open interest tool, you can open the open interest tool inside Quantsapp. This is Nifty's open interest. You can see there are green bars, there are red bars. Okay, green bar is call open interest, red bar is put open interest. So the biggest green bar is the resistance, biggest red bar is the support. So options open interest, for people who do not know, it is viewed as from a seller's perspective. Option writer's perspective is always used when it comes to options open interest. So you know what is actually going on there. Okay. Now, what about the entire sector? This is script wise open interest. You can select multiple scripts. So Nifty, Bank Nifty, or any script. But what about sector wise open interest? So for sector wise open interest, I generally look at consolidated open interest. So consolidated open interest is a very simple tool, very easy to use tool actually, which can give you a sector wide idea of what open interest looks like, right? So it can give you market wide open interest idea as well, and it can give you a sector wide open interest as well. Okay. So you can see that if I want to plot open interest market wide, the entire FNO basket will have multiple strikes and different strikes. So here we have added delta values. So if I just zoom in here, you can see 50C and 50P. It's written here. So 50C, 50P means 50 delta call option and 50 delta put option. So this is the at the money option. Okay, 45C and 55P means this is a slightly OTM call option and slightly ITM put option. Below you can see 55 call and 45 put. So this is a slightly ITM call option, slightly OTM put option. So this is generally the idea that people use. Okay, so consolidated open interest gives you a very nice idea as to what the open interest data looks like. Okay, so generally you will see that the heaviest call and heaviest put is quite far off because sellers tend to keep it that way. You can see the heaviest call is at 5 delta call option and the heaviest put is at around, I guess, 95 delta. You can see it right here, 95 delta. Can I actually add it? Okay, it's 95 delta, right? So this is not actually ideal. So what I like to do is I like to look at the action packed zone. Where does the maximum action happen? So the maximum action or the maximum volume occurs between the at the money strikes. So I would say the strikes between 40 and 60 delta. The strikes between 40 delta and 60 delta. These are the strikes that generally take the most volume. Okay, you can see it right here. Okay, yeah, 60 delta. So from 40 delta to 60 delta, right? So these 5 strikes will have the most volume in general. Okay, it won't have the most open interest, but it will have the most volume. So major activity occurs in this area. Okay, just look at the money strike. What do you see? Green bar bigger than the red bar. Green bar bigger than the red bar. Even on the in the money side, you can see that the green bar is bigger than the red. Right? Clearly, I can see. So this means that overall call writing is much higher. Just look at the money strike. So in the entire market, call writing is much higher. If call writing is higher, that means that market could fall down from here. As simple as that, call writing is higher, market could fall down from here. Markets could fall down from here. Even on the in the money put side, there is some slight addition. On the in the money call side, there is some slight addition. There are multiple things like that. But the at the money strike is directly showing me that call addition is much higher, much more concentration. So markets could fall bearish. If markets are going bearish, then would I look at a bullish sector or a bearish sector? It's quite evident that I would look at a bearish sector in that case, right? Bearish sector is something that would help me greatly. So further, let's delve into that. Okay, so let's look at FMCG and realty now. Okay, so you can add individual sectors. So FMCG, I will just add here. Okay, we'll look at the entire open interest rate of FMCG. Okay, so FMCG again, I'll concentrate on the volume heavy strikes. So 40 delta to 60 delta, I will focus on those strikes. Okay, same thing. Look at this. What does this tell you? Are the green bars bigger or are the red bars bigger? What are bigger? It's quite evident that the green bars are much bigger. So it clearly showcases that this sector is about to fall down further. So FMCG could fall down a lot further now, right? You can see that FMCG could fall down. We can see multiple put strikes have unwindings. Multiple put strikes have unwindings. On the call side, multiple strikes have addition, and on the put side, multiple strikes have unwinding. So if you see solid green color, that is call addition. If you see solid red color, that is put addition. Or if you see such hollow points on the green side or on the red side, that indicates unwinding on that particular strike. Okay, so FMCG is giving me good confirmation that markets could fall down from here. And then similarly, let's look at realty. If we look at realty, I'm pretty sure realty will give you the similar idea. Okay, so I'll just check realty. Realty, again, the same thing I will do. The volume heavy strikes, generally 40 delta to 60 delta. Okay, let's take 35 to 65 this time. 35 delta to 65. Same thing. Call bars much higher. Even near the at the money, it's not that high. But near the 45 delta option, the call writing is much higher. And near the 60 delta option, which is in the money for call, there is huge open interest addition. So this clearly indicates that majorly call addition is taking place and markets could further fall down from here, which is a good idea overall if you ask me, right? Overall, the markets are bound to go bearish and you can enter these trades quite easily. So realty and FMCG could further fall down from here. At least that is what data is suggesting. And since the data is suggesting that, then maybe you can pick out some stocks as well. Now, how do you pick out some stocks? Just based on open interest data. So this time just search for script. If you search for script, you will find built up script. Okay, so just select anything, go to cycle for that particular script. Okay, go to cycle. Now, same thing, 20 and 14 cycle. I will just apply that. So 20 reading is long and long unwinding and count is 14. I'll apply that. Okay. This time I will add a sector. Let's say I add FMCG sector. Okay, where is FMCG? It might be somewhere around here. Now I will apply. Okay, so long and long unwinding, it's nothing, but I was looking at short and short covering, so that was my mistake. I'll just click on apply. So you can see these are the scripts that are following a short and short covering cycle. So we have Tata Consumer, we have Nestle, we have Berger, we have Asian Paint. These are quite good, right? So Tata Consumer is something that I was keeping an eye on, and Tata Consumer has actually fallen down by quite a bit. Even if I open a simple chart on another tab, let's say if I open charts. Okay, let me just open charts. Let's look at Tata Consumer. Tata Consumer is something that I was looking at on the weekend. Right, near the weekend, I was looking at it. Right, so somewhere, okay, 14th, yes. This is where I was looking at it. Now it has fallen quite good. So 18th, it opened slightly gap up and it actually went up. And after that, it has fallen quite good. So this is something which I would say is, again, good overall. So this is nice. This is nice. So I had expected that Tata Consumer could fall down just based on this analysis, and it has fallen down. Now, how would I have triggered an entry on Tata Consumer? So I would say you can look at open interest data. Okay, you can look at open interest data of Tata Consumer, and the heaviest call was at 1,110 rupees. 1,110 rupees. So as soon as that level was broken, you could have entered the trade. So 1,110 level was broken somewhere around on this year, right? On this day, 1,110 level was broken. Let's just plot it right here. So 1,110. Okay, on this level, we had the heaviest put, right? So this level was broken here, and then it has given a decent. So let's check the move. Let's assume we entered a trade somewhere around here on the closing of this candle, and after that it has given a decent move of 1.66%, which is good. This is actually quite good, so you can analyze these things quite easily. All right, so Tata Consumer is a good one. Let's check out one from the realty sector as well. Right, where is the realty sector? Okay, it might be somewhere around here. Apply it. DLF. Okay, DLF has a good cycle here. So DLF might be a decent trade. Let's look at the open interest rate of DLF. DLF I was not actually looking at. I was looking at Tata Consumer. DLF I was not looking at. So for DLF, if we look closely, the heaviest put is at 800 level. So it's quite far. Let's look at the next expiry. Okay, so 800 level is an essential pivot here. So I would say DLF, if this cycle continues around the 800 level, I would say that this is the level that needs to be broken if you want to go for a bearish trade. Okay, we are very close to the monthly expiry. Then I feel like next expiry, this level could break and then you can enter a trade here. So DLF around 800 level. Okay, DLF. Yeah, 800 level is crucial as of now. So this level, it could fall, but again, I would still wait for the level of 800, right? So that is how you can analyze. I'll just recap once real quick. First thing that you want to do is look at cycle. Okay, so sector, if you search for sector, so you'll find built up sector cycle over here. You do the same thing, 20 and 14, to identify which sectors are actually there. So 20 reading is long and long unwinding, count is 14. You can see whatever the long sectors are and whatever the short sectors are, you can find those, right? After that, you can go to consolidated open interest, consolidated open interest. You can go to consolidated open interest to analyze what is going on. Okay, so you can look at the entire market firstly to see whether go bullish or whether to go bearish. Okay, so as of now, I know that market could go bearish as of now because you can see that the 50 delta option has massive call addition throughout the market, right? Market wide open interest is showing me this thing, so there's a very good chance that it could fall down from here. Okay. Next, what we did, we looked at the bearish sector, so FMCG. Same thing we looked at on FMCG. FMCG, so around the 50 delta option, we zoomed in a bit on the 50 delta option and then we looked at it. So same thing we saw that massive additions on the call side, and for realty also we saw the same thing, massive additions on the call side. So realty had a unusual change in open interest, but still it was quite evident that 50 delta options, not just the 50 delta option, but multiple call options had addition, which is quite good. Okay. After that, we jumped on to script cycle. So we went to script. So built up script cycle. We went to that. Okay. After that, we went for a short and short covering. We set the count to 14 and we applied the sector of FMCG. Where is FMCG? FMCG and realty. Right. So these are the stocks that are following this particular cycle on that FMCG sector. Okay, out of that, we identified Tata Consumer. Tata Consumer, I had an eye on for a while, but we also identified DLF. Okay, right, DLF. So once you identify a stock based on this, let's say realty, you can have multiple stocks. So you can look at multiple stocks and then you can go for the open interest data of that particular stock. So normal open interest data instead of consolidated, look at normal open interest data and add here DLF. Okay. Wherever the heaviest put is, or vice versa, if you're going for a bullish trade, wherever the heaviest call is, if that breaks, if that level is compromised, in that case, you can go for that particular directional trade. So when it comes to strategies, you could go for a positional trade in this case. You could also go for an intraday trade in this case. But if you're going for an intraday trade, I would say a naked option would be better, right? So long call or long put. If you're going for a positional trade, then debit spreads would probably be the way to go. All right. So that is how you can analyze these things. That is it from me. Thank you so much for watching, guys. Thank you so much for being a part of the Quantsapp family. I hope you guys enjoyed this video. If you let me know in the comments if you like this sort of videos where I showcase entire setup, all right, so that you build confidence and then you can trade with the help of this as well. Now, this is something that not a lot of Quantsapp users are using, but this is something that you should use. Obviously, traders want ready-made trades and ready-made signals, but if you do some hands-on analysis with those data points, I'm pretty sure that you can become a pro trader like me as well. Okay. All the best on your trading journey. I will see you guys very soon in the next video. And thank you so much, guys.